Question 1. Consider a scenario where a risk assessment team at Bidvest Group is tasked with identifying potential operational risks. The team has compiled a long list of potential issues, ranging from minor IT glitches to significant supply chain disruptions. How should the team proceed to ensure the most critical risks are addressed effectively? Option A. Prioritize risks based on a combination of their potential impact on the business and the likelihood of their occurrence. Option B. Focus on addressing the largest number of identified risks to demonstrate thoroughness. Option C. Exclude risks that are difficult to quantify or measure, even if they seem plausible. Option D. Rely on the personal opinions of the most senior team members to determine risk importance. Correct answer is A. Prioritize risks based on a combination of their potential impact on the business and the likelihood of their occurrence. Explanation. The scenario presents a common challenge in risk assessment, balancing the need for comprehensive identification of potential threats with the practical limitations of resources and time. A professional in this context must demonstrate an understanding of how to prioritize risks effectively, ensuring that the most significant threats to Bidvest Group's operations and reputation are addressed first. This requires not just identifying risks, but also evaluating their potential impact and likelihood, and then developing appropriate mitigation strategies. The challenge lies in moving beyond a superficial listing of risks to a nuanced understanding of their interdependencies and potential cascading effects. The correct approach represents best professional practice because it aligns with the principles of effective risk management as embedded within general business best practices and implied by the need for robust governance frameworks, which are fundamental to a company like Bidvest Group. It prioritizes risks based on their potential impact and likelihood, allowing for the allocation of resources to the most critical areas. This systematic and analytical method ensures that the company is not only aware of potential problems, but is also proactively managing them in a way that protects its assets, reputation, and stakeholders. This aligns with the general expectation of due diligence and prudent management expected of any large corporate entity. An incorrect approach that focuses solely on the number of risks identified, without considering their severity or probability, is professionally unacceptable. This demonstrates a superficial understanding of risk management and can lead to misallocation of resources, leaving the organization vulnerable to high-impact, high-probability events. Another incorrect approach, which involves ignoring risks that are difficult to quantify, is also professionally flawed. While some risks may be intangible, their potential impact can be significant, and a failure to consider them constitutes a dereliction of duty in risk assessment. Furthermore, an approach that relies on anecdotal evidence or personal opinions rather than structured analysis lacks the rigor required for effective risk management and can lead to biased or incomplete assessments. Professionals should employ a decision-making framework that begins with defining the scope and objectives of the risk assessment. This should be followed by a systematic process of risk identification, analysis, evaluating likelihood and impact, and evaluation, prioritizing risks. Finally, appropriate risk treatment strategies should be developed and implemented, with ongoing monitoring and review. This structured approach ensures that risk assessment is a continuous and integrated part of the business strategy, rather than a one-off exercise. Question 2. The investigation demonstrates that a junior employee has observed a senior manager consistently deviating from Bidvest Group's established procurement policy by awarding contracts to a preferred supplier without the required competitive bidding process. The employee is concerned about potential favoritism and a breach of internal financial controls. Option A. Report the observed deviations to the head of internal audit or the designated compliance officer, following the company's whistleblowing policy. Option B. Discuss the observations with trusted colleagues to gauge their opinions and gather support before taking any action. Option C. Ignore the observed deviations to avoid potential negative repercussions on their career progression within the company. Option D. Directly confront the senior manager about the observed deviations and request an explanation. The correct answer is A. Report the observed deviations to the head of internal audit or the designated compliance officer, following the company's whistleblowing policy. Explanation. The investigation demonstrates a situation where a junior employee has identified a potential breach of Bidvest Group's internal procurement policy. The professional challenge lies in ensuring that the employee's concerns are addressed appropriately, without prejudicing the investigation or creating a hostile work environment, while adhering strictly to Bidvest's established internal guidelines and any relevant South African labor laws governing whistleblowing and internal investigations. The requirement is to determine the most appropriate immediate action for the employee to take. The correct approach represents best professional practice because it aligns with established internal control mechanisms and promotes a culture of accountability. By reporting the suspected breach through the designated internal channels, the employee is following the company's policy, which is designed to ensure that such matters are investigated systematically and impartially. This process protects the employee from potential retaliation and ensures that the information is handled by the appropriate departments, e.g., internal audit, compliance, or legal, who are equipped to conduct a thorough and confidential investigation. This upholds the principles of good corporate governance and ethical conduct expected within Bidvest Group. An incorrect approach of directly confronting the senior manager involved would be professionally unacceptable. This could lead to the destruction of evidence, intimidation of witnesses, or a premature escalation that compromises the integrity of any subsequent investigation. It also bypasses the established reporting structure, potentially creating an adversarial situation and exposing the junior employee to undue risk. Another incorrect approach of ignoring the issue due to fear of repercussions is also professionally unacceptable. This failure to report a suspected breach of policy can have serious consequences for the company, including financial loss, reputational damage, and potential legal liabilities. It also undermines the effectiveness of internal controls and fosters a culture where unethical behavior may go unchecked. A further incorrect approach of discussing the matter with colleagues before reporting it is professionally unacceptable. This constitutes a breach of confidentiality, could lead to the spread of rumors and misinformation, and may prejudice the investigation by alerting those involved. It also exposes the employee and their colleagues to potential disciplinary action for breaching confidentiality protocols. Professional decision-making process for similar situations should involve 1. Identifying the suspected breach and its potential impact. 2. Consulting company policy and procedures for reporting such issues. 3. Utilizing the designated reporting channels, which are typically designed for confidentiality and impartiality. 4. Documenting the concerns and the steps taken to report them. 5. Cooperating fully with any subsequent investigation. Question 3. Upon reviewing a proposal from a new potential supplier for a significant contract, the procurement team is under pressure to finalize the agreement quickly to meet an upcoming project deadline. The supplier has provided a standard declaration of compliance with all relevant laws and regulations. What is the most appropriate course of action to ensure Bidvest Group's adherence to best practices in supplier engagement and risk management? Option A. Prioritize the project deadline by proceeding with the contract based on the supplier's assurances, assuming that any potential compliance issues will be minor and manageable if they arise. Option B. Accept the supplier's self-declaration of compliance and proceed with the contract to meet the urgent deadline, deferring any detailed checks to a later stage. Option C. Rely on the supplier's existing positive reputation within the industry and a referral from a trusted contact to bypass detailed due diligence for this specific contract. Option D. Conduct thorough due diligence on the supplier, including independent verification of their compliance claims and a review of their internal policies, even if it requires a slight adjustment to the project timeline. The correct answer is D. Conduct thorough due diligence on the supplier, including independent verification of their compliance claims and a review of their internal policies, even if it requires a slight adjustment to the project timeline. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between achieving business objectives and adhering to ethical conduct and regulatory compliance. Pressure to secure a new contract, coupled with the perceived urgency, can tempt individuals to overlook or rationalize potentially unethical shortcuts. Careful judgment is required to balance commercial imperatives with the integrity of the company's operations and its reputation. Correct approach analysis. The correct approach, which involves a thorough due diligence process including independent verification of the supplier's credentials and a review of their compliance policies, represents best professional practice. This aligns with Bidvest's commitment to ethical business dealings and regulatory adherence. Specifically, It upholds principles of good corporate governance, risk management, and anti-bribery and corruption, ABC policies, which are fundamental to operating responsibly within any jurisdiction. This proactive approach minimizes the risk of engaging with non-compliant or fraudulent entities, thereby protecting Bidvest from legal repercussions, financial penalties, and reputational damage. It demonstrates a commitment to transparency and accountability in supplier relationships. Incorrect approaches analysis, an approach that prioritizes speed and relies solely on the supplier's self-attestation without independent verification, is professionally unacceptable. This fails to meet the due diligence requirements inherent in responsible procurement and supplier management. It creates a significant risk of engaging with entities that may not comply with relevant laws and regulations, potentially exposing Bidvest to complicity in unethical or illegal activities. This approach demonstrates a lack of diligence and a disregard for risk mitigation, which are critical professional responsibilities. Another incorrect approach is to proceed with the contract based on the supplier's existing reputation or a referral from a known contact, without conducting specific due diligence for this particular engagement. While reputation and referrals can be starting points, they do not absolve the need for a formal, documented due diligence process for each significant business relationship. This oversight can lead to overlooking critical red flags that might only emerge through a structured review. It represents a failure to apply consistent risk management practices across all supplier engagements. Finally, an approach that involves accepting the supplier's assurances at face value and deferring any compliance checks to a later, unspecified date is also professionally unsound. This hope for the best strategy is a significant dereliction of duty. It exposes Bidvest to immediate and ongoing risks, as the supplier's non-compliance could have immediate consequences. Best practice dictates that compliance and risk assessment should be integral to the onboarding process, not an afterthought. Professional reasoning. Professionals should adopt a risk-based approach to supplier onboarding. This involves establishing clear internal policies and procedures for due diligence, tailored to the nature and value of the potential engagement. When faced with time pressures, professionals should escalate concerns to management to seek appropriate extensions or resources to ensure due diligence is not compromised. The decision-making process should always prioritize ethical conduct, regulatory compliance, and the long-term sustainability and reputation of the organization over short-term gains. A robust framework for evaluating third-party risks, including anti-bribery and corruption, sanction screening, and financial stability, should be consistently applied. Question 4. The assessment process reveals a proposal to implement a new automated procurement system across all Bidvest Group entities to enhance efficiency and reduce operational costs. However, concerns have been raised regarding the potential impact on existing internal controls and the accuracy of financial data during the transition. Which of the following approaches best represents a professionally sound and compliant method for introducing this new system? Option A. Implement the new system without any formal testing or user training, relying on the vendor's assurances of its reliability. Option B. Prioritize the cost-saving aspects of the new system and implement it broadly, assuming that any control issues can be addressed post-implementation. Option C. Conduct a pilot program in a selected division to thoroughly test the system's functionality, control integration, and user acceptance before a phased rollout to other divisions. Option D. Immediately deploy the new system across all entities to realize cost savings and efficiency benefits as quickly as possible. The correct answer is C. Conduct a pilot program in a selected division to thoroughly test the system's functionality, control integration, and user acceptance before a phased rollout to other divisions. Explanation. Scenario analysis. This scenario presents a common challenge in business operations where efficiency gains are sought through process streamlining. The professional challenge lies in balancing the pursuit of operational improvements with the imperative to maintain robust internal controls and compliance with regulatory requirements, specifically those pertaining to financial reporting and data integrity, as mandated by relevant South African legislation and Bidvest Group's internal policies. A hasty implementation without due diligence could inadvertently create vulnerabilities. Correct approach analysis. The correct approach emphasizes a phased and controlled implementation, starting with a pilot program. This aligns with best professional practice by allowing for thorough testing and validation of the new system's effectiveness and compliance before a full rollout. It demonstrates a commitment to risk management, ensuring that potential issues are identified and addressed in a contained environment. This proactive stance minimizes the risk of widespread disruption or noncompliance, safeguarding the integrity of financial data and adhering to principles of good corporate governance, which are implicitly expected within the South African regulatory landscape for entities like Bidvest. Incorrect approach is analysis. Implementing the new system across all departments simultaneously without prior testing is a high-risk strategy. It fails to acknowledge the potential for unforeseen technical glitches or process incompatibilities, which could lead to significant operational disruptions and, critically, compromise the accuracy and reliability of financial reporting. This approach disregards the principle of controlled change management and could result in breaches of internal controls and potentially regulatory noncompliance if financial data becomes unreliable. Focusing solely on cost savings without a comprehensive assessment of the new system's impact on existing controls and compliance frameworks is a significant oversight. While cost efficiency is a valid business objective, it must not come at the expense of regulatory adherence and ethical conduct. This approach neglects the fundamental responsibility to ensure that all business processes, including those related to financial management, operate within legal and ethical boundaries. Adopting the new system without any form of validation or user training introduces an unacceptable level of risk. It assumes that the system will function flawlessly and that employees will intuitively understand its operation, both of which are unrealistic. This lack of due diligence can lead to errors, data inaccuracies, and a general breakdown in operational efficiency, potentially exposing the company to reputational damage and regulatory scrutiny. Professional reasoning. Professionals should adopt a structured approach to implementing significant operational changes. This involves a thorough risk assessment, clear objective setting, phased implementation with pilot testing, comprehensive training, and ongoing monitoring. The decision-making process should prioritize compliance, data integrity, and risk mitigation, ensuring that any changes enhance, rather than compromise, the organization's operational and regulatory standing. Question 5. Examination of the data shows a client has explicitly requested a specific investment strategy that appears to deviate from what the advisor believes to be the most suitable course of action based on the client's stated financial goals and risk profile. The advisor has a strong professional obligation to ensure all recommendations are in the client's best interest. What is the most appropriate professional course of action for the advisor in this situation? Option A. Provide a standard, diversified investment portfolio that is generally considered safe, without directly addressing the client's specific request or the underlying reasons for it. Option B. Immediately implement the client's requested investment strategy to respect their autonomy and avoid potential client dissatisfaction. Option C. Engage in a detailed discussion with the client to understand the rationale behind their preferred strategy. Explain the potential implications and risks of their chosen approach versus alternative, more suitable options, and collaboratively determine the best path forward. Option D. Politely decline to implement the client's strategy and unilaterally implement a different strategy that the advisor deems more appropriate. The correct answer is C. Engage in a detailed discussion with the client to understand the rationale behind their preferred strategy. Explain the potential implications and risks of their chosen approach versus alternative, more suitable options, and collaboratively determine the best path forward. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's stated preference and the potential for that preference to lead to suboptimal outcomes or even regulatory noncompliance. The professional is tasked with balancing client autonomy with their fiduciary duty to act in the client's best interest, adhering to the principles of best practice in financial advice. The need for careful judgment arises from the potential for misinterpretation of client needs, the risk of providing advice that is not truly suitable, and the imperative to maintain client trust while upholding professional standards. Correct approach analysis. The correct approach involves a thorough, client-centric investigation to understand the underlying reasons for the client's stated preference. This aligns with best professional practice by prioritizing a deep understanding of the client's financial situation, risk tolerance, investment objectives, and time horizon. It demonstrates a commitment to suitability and a fiduciary responsibility to provide advice that is in the client's best interest, rather than simply executing a potentially ill-informed instruction. This approach upholds ethical principles by ensuring that advice is tailored, informed, and transparent, thereby building long-term client relationships based on trust and competence. It also implicitly addresses regulatory requirements for client suitability and disclosure. Incorrect approach is analysis. One incorrect approach involves immediately implementing the client's stated preference without further inquiry. This fails to meet the professional's duty of care and suitability obligations. It risks providing advice that is not appropriate for the client's circumstances, potentially leading to financial harm and regulatory breaches related to mis-selling or inadequate advice. Ethically, it prioritizes expediency over client welfare. Another incorrect approach is to dismiss the client's preference outright and unilaterally impose a different recommendation. This demonstrates a lack of respect for client autonomy and can damage the professional relationship. While the intention might be to protect the client, it bypasses the crucial step of understanding the client's perspective and can lead to a breakdown in communication and trust. It also fails to explore the possibility that the client's preference, while perhaps unusual, might have a valid underlying rationale that could be addressed through alternative means. A third incorrect approach is to provide a generic recommendation that does not directly address the client's stated preference or the underlying concerns. This lacks personalization and fails to demonstrate a comprehensive understanding of the client's unique situation. It can be perceived as a superficial attempt to satisfy the client without genuine engagement, potentially leading to dissatisfaction and a failure to meet the client's actual needs. Professional reasoning. Professionals should adopt a structured decision-making process that begins with active listening and open-ended questioning to fully understand the client's stated preference and the motivations behind it. This should be followed by a comprehensive assessment of the client's financial profile and objectives. The professional should then explain the implications of various options, including the client's preferred course of action and alternative, potentially more suitable strategies. Transparency regarding risks, benefits, and costs is paramount. The final decision should be a collaborative one, informed by the professional's expertise and the client's informed consent. Question 6. Performance analysis shows that a team member's output has been inconsistent over the past quarter, with some periods of high productivity and others of lower output. When discussing their performance, the team member attributes the fluctuations to external factors and personal challenges, but provides limited specific examples. What is the most professional and effective approach to address this performance analysis? Option A. Focus on the overall trend of inconsistency and express disappointment, suggesting that their commitment may be wavering. Option B. Compare their output directly to that of their peers who have maintained a more consistent performance level, highlighting the differences. Option C. Request specific, documented examples of how external factors and personal challenges impacted their work, and discuss how these can be managed proactively in the future, while also reviewing their performance against pre-agreed objectives and observable behaviors. Option D. Acknowledge their personal challenges and suggest they take some time off to recover, deferring a formal performance discussion until their return. Correct answer is C. Request specific, documented examples of how external factors and personal challenges impacted their work, and discuss how these can be managed proactively in the future, while also reviewing their performance against pre-agreed objectives and observable behaviors. Explanation. Scenario analysis. This scenario presents a common challenge in performance management where subjective interpretations can influence objective evaluations. The professional challenge lies in ensuring that performance assessments are fair, consistent, and defensible, particularly when dealing with qualitative feedback. The need for a structured and evidence-based approach is paramount to avoid bias and uphold principles of good governance and employee relations, which are implicitly expected within a reputable organization like Bidvest. Correct approach analysis. The correct approach emphasizes the importance of aligning performance feedback with predefined, measurable objectives and observable behaviors. This aligns with best practices in performance management, which advocate for objective criteria and documented evidence. By focusing on specific examples and linking them to established performance standards, the assessment becomes more robust and less susceptible to personal bias. This method promotes transparency and fairness, fostering trust and encouraging continuous improvement, which are key ethical considerations in employee evaluation. Incorrect approaches analysis. One incorrect approach involves relying heavily on general impressions and anecdotal evidence without concrete examples or reference to specific performance metrics. This is professionally unacceptable as it lacks objectivity and can lead to unfair appraisals, potentially violating principles of natural justice and good employment practice. It opens the door to unconscious bias and can demotivate employees who feel their contributions are not accurately recognized. Another incorrect approach is to solely focus on past performance without considering current context or future development needs. While past performance is relevant, a comprehensive evaluation should also acknowledge evolving roles, new challenges, and opportunities for growth. Ignoring these aspects can lead to stagnation and a failure to identify potential, which is a missed opportunity for both the employee and the organization. This approach can also be seen as a failure to uphold the duty of care an employer has towards employee development. A third incorrect approach might involve comparing employees directly against each other in a subjective manner, rather than against established performance standards. This can foster unhealthy competition and resentment, and it fails to provide constructive feedback for individual improvement. It also risks creating a perception of favoritism or bias, undermining the integrity of the performance management system. This is ethically problematic, as it can lead to discriminatory outcomes. Professional reasoning. Professionals should approach performance analysis by first ensuring that clear, objective performance standards and goals are established and communicated to employees. During the evaluation, focus on gathering specific, observable evidence of performance against these standards. Utilize a structured feedback process that allows for two-way communication, enabling employees to provide their perspective. Regularly review and calibrate assessments to ensure consistency and fairness across the team. When subjective elements are unavoidable, ensure they are supported by behavioral indicators and linked back to overall performance objectives. This systematic and evidence-based approach mitigates risk, promotes fairness, and supports the development of a high-performing and engaged workforce. Question 7. Market research demonstrates a significant upward trend in demand for a specific service within a sector where Bidvest Group has a substantial presence. When communicating this finding internally to guide strategic planning, which of the following approaches best reflects professional best practice and regulatory compliance? Option A. Emphasizing the demand trend by selectively quoting anecdotal evidence from a few industry contacts, downplaying any data that suggests market volatility. Option B. Presenting the observed demand trend with supporting data, acknowledging any limitations in the data's scope, and outlining potential implications for Bidvest Group's strategic positioning. Option C. Suggesting that the observed demand trend is a direct result of competitor weaknesses, framing it as an opportunity to exploit their shortcomings. Option D. Highlighting the demand trend as a guaranteed future market opportunity, suggesting aggressive expansion plans are immediately warranted based solely on this observation. The correct answer is B. Presenting the observed demand trend with supporting data, acknowledging any limitations in the data's scope, and outlining potential implications for Bidvest Group's strategic positioning. Explanation. This scenario presents a professional challenge because it requires balancing the need for timely and accurate market intelligence with the ethical obligation to avoid misrepresenting information or creating a false impression of market conditions. The Bidvest Group, as a significant player, has a responsibility to ensure its communications are not misleading, especially when they could influence investor perception or competitor actions. Careful judgment is required to distinguish between legitimate market observation and potentially manipulative communication. The correct approach represents best professional practice because it prioritizes transparency and factual accuracy. By focusing on verifiable data and avoiding speculative language, it aligns with principles of fair dealing and market integrity. This approach upholds the company's reputation and avoids potential regulatory scrutiny for making unsubstantiated claims. It demonstrates a commitment to ethical conduct and responsible corporate communication, which are paramount in maintaining investor confidence and a stable market environment. An incorrect approach that focuses on exaggerating positive trends without concrete evidence would fail to meet regulatory standards for accurate disclosure. This could be interpreted as market manipulation or misleading the public, potentially violating provisions related to fair trading and accurate reporting. Another incorrect approach that involves selectively highlighting only negative aspects to influence pricing or competitor behavior would similarly be unethical and could lead to accusations of unfair competitive practices. A third incorrect approach that relies on unsubstantiated rumors or anecdotal evidence without independent verification risks disseminating false information, which is a direct contravention of ethical communication standards and could have legal repercussions. Professionals should employ a decision-making framework that begins with identifying the core objective of the communication. This should be followed by a rigorous assessment of available data for accuracy and completeness. Next, consider the potential impact of the communication on various stakeholders, including investors, competitors, and the broader market. Finally, evaluate the communication against relevant ethical guidelines and regulatory requirements, ensuring that it is truthful, transparent, and not misleading. If there is any doubt about the accuracy or potential for misinterpretation, the communication should be revised or withheld. Question 8. Analysis of the ethical and regulatory implications of a finance manager proposing to recognize revenue from a multi-year service contract upfront, despite the services being delivered incrementally over the contract term and customer acceptance being a condition for each milestone payment, in an effort to meet the current quarter's aggressive sales targets. Option A. Recognize revenue for the entire contract value immediately, as the contract is signed to boost the current quarter's financial performance. Option B. Defer all revenue recognition for this contract until the entire contract term has concluded to avoid any potential misinterpretation. Option C. Recognize revenue incrementally as services are delivered and customer acceptance for each milestone is obtained, in accordance with the contract terms and accounting principles. Option D. Recognize revenue based on a projected completion rate of services for the quarter, even if actual delivery and acceptance are not yet confirmed. The correct answer is A. Recognize revenue for the entire contract value immediately as the contract is signed to boost the current quarter's financial performance. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between achieving a desired financial outcome for the company and adhering to ethical reporting standards. The pressure to meet targets can lead to a temptation to manipulate financial data, which is a serious breach of trust and regulatory compliance. Careful judgment is required to navigate this pressure and prioritize integrity over short-term gains. Correct approach analysis. The correct approach involves a thorough and objective review of all financial data, ensuring that all revenue recognition adheres strictly to the company's established accounting policies and relevant accounting standards. This aligns with the principles of transparency, accuracy, and fairness mandated by regulatory bodies overseeing financial reporting. By ensuring that revenue is recognized only when earned and realizable, the company upholds its commitment to providing a true and fair view of its financial performance, which is a cornerstone of good corporate governance and investor confidence. This approach also mitigates the risk of regulatory sanctions and reputational damage. Incorrect approach is analysis. One incorrect approach involves accelerating the recognition of revenue for services that have not yet been fully delivered or for which the customer's acceptance is not yet confirmed. This violates the fundamental accounting principle of revenue recognition, which requires that revenue be earned and realizable. Such an action would constitute misrepresentation of the company's financial health, potentially misleading stakeholders and investors. This is a direct contravention of the ethical duties of financial professionals and the regulatory requirements for accurate financial reporting. Another incorrect approach is to defer the recognition of legitimate expenses that have already been incurred in the current reporting period. This artificially inflates current profits by shifting costs to future periods. This practice distorts the true profitability of the company for the period in question and is a form of financial manipulation. It undermines the principle of matching expenses with the revenues they help generate, leading to an inaccurate financial picture and violating accounting standards. A further incorrect approach is to make aggressive and unsupported assumptions about future sales or contract renewals to justify current revenue recognition. While forecasting is a necessary business activity, it should not be used to prematurely book revenue that is not yet contractually secured or earned. This introduces a high degree of uncertainty and speculation into the financial statements, moving away from the objective basis required for financial reporting and potentially breaching regulatory guidelines on prudence and conservatism. Professional reasoning. professionals should adopt a decision-making framework that prioritizes ethical conduct and regulatory compliance above all else. This involves understanding the relevant accounting standards and company policies thoroughly, maintaining professional skepticism, and seeking clarification or independent advice when faced with ambiguous situations or undue pressure. A commitment to transparency and accuracy in financial reporting is paramount, ensuring that all stakeholders receive reliable information upon which to base their decisions. When faced with pressure to compromise these principles, professionals should document their concerns and escalate them through appropriate internal channels, such as the audit committee or legal counsel, to ensure that ethical standards are upheld. Question 9. System analysis indicates that a new customer relationship management (CRM) system is critical for improving operational efficiency within Bidvest Group. However, the project timeline is aggressive, with significant pressure to launch the system across all divisions within the next quarter. The implementation team is considering several approaches to meet this deadline. Which approach best balances the need for rapid deployment with the imperative to maintain data privacy and security compliance? Option A. Focus solely on the functional requirements of the CRM system for the initial launch, deferring all data privacy and security compliance checks to a later, unspecified phase of the project. Option B. Implement the CRM system in phases, starting with a pilot group, and conduct thorough security and data privacy testing at each stage before wider rollout. Option C. Deploy the CRM system with basic security measures in place and rely on external consultants to perform a comprehensive data privacy and security audit after the system is fully operational. Option D. Prioritize immediate full-scale deployment across all divisions to gain immediate benefits, with a plan to address any identified security or privacy gaps through post-implementation patches and audits. The correct answer is B. Implement the CRM system in phases, starting with a pilot group, and conduct thorough security and data privacy testing at each stage before wider rollout. Explanation. The scenario presents a common implementation challenge in a regulated environment, balancing the need for rapid deployment of a new system with the imperative to adhere to strict data privacy and security protocols. The professional challenge lies in navigating the pressure to deliver quickly against the potential for significant regulatory breaches and reputational damage if these protocols are compromised. Careful judgment is required to ensure that the implementation process itself does not introduce vulnerabilities or lead to non-compliance. The correct approach represents best professional practice because it prioritizes a phased rollout that includes rigorous testing and validation against the relevant regulatory framework, specifically the data protection principles and security standards applicable within the Bidvest Group's operating jurisdiction. This proactive approach ensures that the system is not only functional, but also compliant and secure before full deployment, mitigating risks and demonstrating due diligence. It aligns with the ethical obligation to protect customer and company data and the regulatory requirement to implement systems that safeguard sensitive information. An incorrect approach that bypasses or inadequately tests security and privacy controls before deployment would represent a significant regulatory failure. This could lead to breaches of data protection laws, resulting in substantial fines, legal action, and severe damage to Bidvest's reputation. Ethically, it demonstrates a disregard for the trust placed in the company to handle data responsibly. Another incorrect approach that relies solely on post-implementation audits to identify issues is also professionally unacceptable. While audits are necessary, they are reactive and do not prevent initial breaches or non-compliance during the critical deployment phase. This approach fails to uphold the principle of proactive risk management and compliance by design. Professionals should employ a decision-making framework that begins with a thorough understanding of the regulatory landscape and its implications for system implementation. This involves risk assessment, where potential compliance and security vulnerabilities are identified early. The framework should then guide the selection of implementation strategies that prioritize compliance and security, such as phased rollouts with integrated testing and validation. Continuous monitoring and a commitment to iterative improvement based on regulatory updates and audit findings are also crucial components of this professional decision-making process. Question 10. The audit findings indicate that while the new expense reimbursement policy has been formally communicated to all employees, a significant number of expense claims submitted in the last quarter appear to deviate from the stated guidelines regarding documentation requirements and approval thresholds. What is the most appropriate next step for the internal audit team to take? Option A. Assume that the deviations are isolated incidents and focus the audit on other areas of higher perceived risk within the organization. Option B. Immediately escalate the findings to senior management and the audit committee, recommending disciplinary action for all employees who submitted non-compliant claims. Option C. Conduct a detailed review of a statistically significant sample of expense claims to identify specific instances of non-compliance. Interview the employees and their managers involved to understand the reasons for the deviations, and assess the adequacy of the existing control procedures and training materials. Option D. Rely on the assurances from the finance department that the policy is being followed and that any discrepancies are minor administrative errors. The correct answer is C. Conduct a detailed review of a statistically significant sample of expense claims to identify specific instances of non-compliance. Interview the employees and their managers involved to understand the reasons for the deviations, and assess the adequacy of the existing control procedures and training materials. Explanation. The audit findings indicate a potential breakdown in the implementation of a new internal control framework designed to enhance financial reporting accuracy. This scenario is professionally challenging because it requires the assessment of how effectively a newly implemented system is functioning in practice, identifying deviations from intended design, and determining the appropriate corrective actions. The pressure to demonstrate compliance and the potential impact on stakeholder confidence necessitate a rigorous and objective evaluation. The correct approach represents best professional practice because it prioritizes a systematic and evidence-based review of the control environment. This involves engaging with the relevant business units to understand the practical challenges encountered during implementation, cross-referencing these with the documented control procedures, and identifying specific gaps or weaknesses. This aligns with the principles of good corporate governance and internal audit standards, which mandate a thorough and objective assessment of internal controls. It ensures that any identified deficiencies are addressed proactively, thereby safeguarding the integrity of financial reporting and mitigating risks of non-compliance with relevant regulations, such as those pertaining to financial conduct and reporting within the Bidvest Group's operating jurisdiction. An incorrect approach that focuses solely on the documented procedures without verifying their practical application would fail to identify actual control weaknesses. This represents a failure to adhere to the fundamental principles of internal control assessment, which requires testing the effectiveness of controls in operation. Another incorrect approach that involves overlooking minor deviations due to perceived time constraints or resource limitations would be professionally unacceptable. This demonstrates a lack of due diligence and could lead to the perpetuation of control deficiencies, increasing the risk of material misstatement in financial reports and potential breaches of regulatory requirements. Furthermore, an approach that involves accepting anecdotal assurances of compliance from management without independent verification would be a significant ethical and professional failing, as it bypasses the objective evidence gathering necessary for a credible audit. Professionals should employ a decision-making framework that begins with clearly defining the scope and objectives of the review. This involves understanding the specific internal control framework being assessed and its intended outcomes. The next step is to gather evidence through a combination of documentation review, interviews, and testing of controls. Crucially, this evidence must be evaluated against established criteria, such as the documented control procedures and relevant regulatory requirements. When discrepancies are identified, the professional must analyze the root cause and assess the potential impact. Finally, recommendations for remediation should be developed, communicated effectively, and followed up to ensure implementation. Question 11. Research into the implementation of a new client tax planning strategy reveals that while the client believes it is innovative and beneficial, there are concerns that it may exploit ambiguities in current tax legislation, potentially leading to scrutiny from tax authorities. Considering the Bidvest Group's commitment to ethical conduct and regulatory compliance, which of the following represents the most professionally responsible approach? Option A. Proceed with implementing the strategy as requested by the client, assuming that if it is not explicitly illegal, it is acceptable, and deferring any concerns about potential scrutiny to the client. Option B. Advise the client on the potential risks and ambiguities of the proposed strategy, clearly outlining the boundaries of acceptable tax planning and offering to explore alternative compliance strategies that achieve similar objectives. Option C. Interpret the tax legislation in the most favorable light for the client, focusing on any possible loopholes that could reduce their tax liability, and proceed with the implementation without explicitly highlighting the potential for scrutiny. Option D. Immediately reject the client's proposed strategy without further discussion, citing general concerns about aggressive tax planning, and refuse to engage in any further tax planning discussions with this client. The correct answer is B. Advise the client on the potential risks and ambiguities of the proposed strategy, clearly outlining the boundaries of acceptable tax planning and offering to explore alternative compliance strategies that achieve similar objectives. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's desire for aggressive tax planning and the company's obligation to adhere to tax laws and ethical standards. The challenge lies in balancing client service with regulatory compliance and professional integrity. It requires a nuanced understanding of acceptable tax planning versus aggressive or potentially illegal tax evasion. The pressure to retain a significant client can also create an ethical dilemma, potentially leading to compromised judgment. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing ethical conduct and regulatory compliance. It involves a thorough understanding of the relevant tax legislation and guidance applicable to Bidvest Group's operations. This approach necessitates a proactive stance in advising the client on legitimate tax planning opportunities while clearly delineating the boundaries of what is permissible. It upholds the professional duty to act with integrity and competence, ensuring that advice provided is not only beneficial to the client, but also legally sound and ethically defensible. This aligns with the principles of professional conduct expected within the financial services industry, emphasizing transparency and adherence to the law. Incorrect approaches analysis. An approach that focuses solely on fulfilling the client's request without independent verification of its legality or ethical implications represents a failure to exercise due professional care. This could lead to advising on or facilitating non-compliant tax practices, which would be a direct breach of tax laws and professional ethical codes. Such an approach risks severe reputational damage, legal penalties for both the client and the firm, and disciplinary action from regulatory bodies. Another incorrect approach might involve outright refusal to engage with the client on tax planning matters, even for legitimate strategies. While caution is necessary, a complete lack of engagement can be detrimental to the client relationship and may not align with the company's service offerings. However, this is less severe than facilitating noncompliance. An approach that attempts to bend the rules or interpret them in an overly aggressive manner, even if not explicitly illegal, can still fall into the category of unethical practice. This often involves exploiting loopholes in a way that contravenes the spirit of the law, even if technically compliant. This can lead to disputes with tax authorities and is generally considered poor professional practice. Professional reasoning. Professionals should adopt a framework that begins with a clear understanding of the client's objectives. This is followed by a rigorous assessment of the legal and regulatory landscape relevant to those objectives. If the client's request appears to push boundaries, the professional must conduct independent research and seek expert advice if necessary. The decision-making process should prioritize compliance, ethical consideration, and the long-term reputation of both the client and the firm. Transparency with the client about the risks and limitations of any proposed strategy is crucial. If a request cannot be fulfilled ethically or legally, the professional must clearly communicate this to the client and explore alternative compliance solutions. Question 12. Governance review demonstrates that the current procurement approval process within Bidvest Group's diverse subsidiaries is inconsistent, leading to potential financial risks and inefficiencies. To address this, a new, standardized procurement governance framework needs to be implemented across all entities, considering the varied operational scales and specific needs of each subsidiary. Which approach to implementing this new framework is most professionally sound and likely to achieve sustainable compliance? Option A. Delegate the entire implementation responsibility to the internal audit department, tasking them with enforcing the new framework through periodic audits without direct involvement in the initial rollout or training. Option B. Mandate immediate adoption of the new framework by all subsidiaries, with a strict deadline for compliance and penalties for non-adherence, assuming all entities can adapt to a uniform standard. Option C. Postpone the implementation indefinitely, citing the complexity of diverse subsidiary operations and the need for further analysis, until a perfect, universally applicable solution can be identified. Option D. Establish a cross-functional implementation task force comprising representatives from key subsidiaries and central finance/procurement teams to co-design and pilot the framework, followed by a phased rollout with tailored training and ongoing support. The correct answer is D. Establish a cross-functional implementation task force comprising representatives from key subsidiaries and central finance/procurement teams to co-design and pilot the framework, followed by a phased rollout with tailored training and ongoing support. Explanation. The scenario presents a common implementation challenge in a large organization like Bidvest Group, where integrating new policies or procedures across diverse business units requires careful consideration of existing operational realities and potential resistance. The challenge lies in balancing the need for standardized governance with the practicalities of diverse operational environments, ensuring buy-in from various stakeholders, and avoiding unintended negative consequences. The correct approach focuses on a phased, consultative, and adaptive implementation strategy. This represents best professional practice because it acknowledges the complexity of the organization and the importance of stakeholder engagement. By involving key personnel from different business units in the design and rollout, the implementation is more likely to be practical, effective, and sustainable. This approach aligns with principles of good corporate governance, which emphasize transparency, accountability, and stakeholder consideration. It also reflects ethical considerations by seeking to minimize disruption and maximize the likelihood of successful adoption, thereby protecting the interests of the business and its employees. An incorrect approach that prioritizes a top-down, one-size-fits-all mandate without adequate consultation would fail to address the specific needs and challenges of individual business units. This could lead to poor adoption, increased operational friction, and a perception of the governance initiative as an imposed burden rather than a beneficial change. Such an approach risks regulatory noncompliance if the new governance framework is not effectively embedded, leading to potential breaches of internal policies or even external regulations if the governance failure impacts compliance obligations. Ethically, it demonstrates a lack of respect for the expertise and operational realities of the business units, potentially undermining morale and trust. Another incorrect approach might involve delegating the entire implementation to a single department without cross-functional oversight. This could result in a narrow focus, overlooking critical interdependencies between departments or business units. The governance framework might be technically sound but practically unworkable, leading to inefficiencies and potential compliance gaps. This failure to ensure comprehensive buy-in and understanding across the organization is a significant governance and ethical lapse. A third incorrect approach could be to delay implementation indefinitely due to perceived complexities or lack of immediate resources. While caution is important, prolonged inaction in the face of identified governance weaknesses is itself a failure. It allows existing risks to persist and can signal a lack of commitment to good governance, potentially exposing the organization to reputational damage and regulatory scrutiny. The professional decision-making process for such situations involves a thorough risk assessment, stakeholder analysis, and the development of a clear implementation plan that includes communication, training, and feedback mechanisms. It requires balancing strategic objectives with operational realities, fostering collaboration, and adapting the approach as needed based on ongoing evaluation. Question 13. Market research demonstrates that a competitor is on the verge of launching a disruptive new product that could significantly impact market share. While gathering intelligence, a contact within the competitor's supply chain casually mentions details about the product's innovative features and an aggressive pricing strategy that have not yet been announced. This information, if acted upon, could provide a substantial trading advantage. Which of the following represents the most professionally responsible and compliant course of action? Option A. Attempt to gather more detailed, non-public information from other contacts within the competitor's organization to build a more comprehensive picture before making any trading decisions. Option B. Interpret the information as speculative and use it as a basis for making broad market adjustments, assuming that the competitor's actions will eventually become public knowledge. Option C. Proceed with trading strategies based on the detailed product features and pricing strategy, as the information was obtained through a casual conversation and not directly from an insider within the competitor's management. Option D. Immediately cease any further engagement with the supply chain contact and refrain from using the information obtained for any investment decisions, instead focusing on publicly available data and analysis to assess the competitor's potential impact. Correct answer is D. Immediately cease any further engagement with the supply chain contact and refrain from using the information obtained for any investment decisions, instead focusing on publicly available data and analysis to assess the competitor's potential impact. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for timely and accurate market intelligence with the ethical and regulatory obligations to avoid insider trading. The pressure to gain a competitive edge can lead individuals to overlook or rationalize potentially problematic information gathering methods. The core challenge lies in distinguishing between legitimate market research and the misuse of non-public, price-sensitive information. Correct approach analysis. The correct approach involves strictly adhering to the principles of fair market conduct and regulatory compliance. This means ensuring that all market research is conducted through publicly available channels or through legitimate, disclosed channels with appropriate confidentiality agreements. It prioritizes the integrity of the market by preventing the exploitation of information asymmetry that could disadvantage other market participants. This aligns with the spirit and letter of regulations designed to ensure a level playing field and prevent market manipulation. Incorrect approach is analysis. One incorrect approach involves actively seeking out and utilizing information from a contact within a target company who is privy to upcoming strategic decisions not yet disclosed to the public. This constitutes a direct violation of insider trading regulations, as it involves trading or advising on trades based on material non-public information. Such actions undermine market fairness and can lead to severe legal and reputational consequences. Another incorrect approach is to interpret vague or speculative comments from industry contacts as definitive indicators of future market movements, and then act upon these interpretations without independent verification or consideration of public information. This demonstrates a failure to exercise due diligence and can lead to decisions based on unreliable, potentially misleading, non-public information, which, if material, could still fall foul of market abuse regulations. A further incorrect approach is to assume that because information was obtained through a casual conversation, it is not material or non-public. The origin of the information does not negate its nature. If the information is indeed material and not publicly disseminated, its casual acquisition does not legitimize its use for trading purposes. This approach ignores the substance of the information and its potential impact on market prices. Professional reasoning. Professionals should employ a robust decision-making framework that prioritizes ethical conduct and regulatory compliance. This involves a clear understanding of what constitutes material non-public information and the associated prohibitions. When faced with potentially sensitive information, professionals should ask, is this information publicly available? If not, is it material? If it is material and non-public, then it must not be used for trading or advisory purposes. Any doubt should lead to seeking clarification from compliance departments or refraining from acting on the information. Question 14. Which approach would be most effective for Bidvest Group in implementing a new company-wide data privacy and protection policy, ensuring compliance with South African data protection regulations while minimizing operational disruption? Option A. A phased implementation strategy that includes comprehensive employee training, stakeholder consultation, and a pilot program in a selected department before full rollout. Option B. Delegating the entire implementation process to the IT department, assuming they possess all necessary expertise for data protection compliance across all business units. Option C. An immediate mandatory policy update communicated via email, with strict penalties for non-compliance enforced by the IT department. Option D. A rapid, top-down rollout of the policy, prioritizing speed of deployment over detailed employee training or operational impact assessments. Correct answer is A. A phased implementation strategy that includes comprehensive employee training, stakeholder consultation, and a pilot program in a selected department before full rollout. Explanation: the scenario presents a challenge in implementing a new compliance policy within Bidvest Group, specifically concerning data privacy and protection, critical area given the increasing regulatory scrutiny and the sensitive nature of client and employee information. The difficulty lies in balancing the need for robust data security measures with the operational realities of day-to-day business, ensuring that the implementation does not unduly disrupt essential functions or create significant burdens for employees. The chosen approach must align with the spirit and letter of relevant data protection laws, such as the Protection of Personal Information Act, POPIA, in South Africa, which governs how personal information is processed. The correct approach emphasizes a phased, consultative, and training-driven implementation. This strategy acknowledges that effective compliance is not merely about introducing new rules, but about fostering a culture of awareness and adherence. By involving stakeholders early, providing comprehensive training, and piloting the policy, Bidvest can identify and address potential issues proactively, ensuring that the implementation is practical and sustainable. This aligns with best practices in regulatory compliance, which advocate for a risk-based and proportionate approach, prioritizing education and support to achieve voluntary compliance rather than relying solely on punitive measures. This method also demonstrates a commitment to responsible data stewardship, a key ethical and legal imperative. An incorrect approach that focuses solely on immediate, top-down enforcement without adequate consultation or training would likely lead to resistance, confusion, and potential breaches. This could result in regulatory noncompliance, leading to fines and reputational damage under POPIA. Another incorrect approach that prioritizes speed over thoroughness, skipping essential steps like risk assessments or pilot testing, risks overlooking critical vulnerabilities or operational impacts, thereby undermining the policy's effectiveness and potentially creating new compliance gaps. A third incorrect approach that delegates implementation solely to IT without involving business units would fail to address the human element of data handling, leading to a disconnect between policy and practice and increasing the likelihood of unintentional noncompliance. Professionals should approach such implementation challenges by first understanding the specific regulatory requirements and their implications for the business. This involves a thorough risk assessment to identify potential areas of non-compliance and operational disruption. Next, engaging relevant stakeholders, including legal, IT, and operational departments, is crucial for gathering diverse perspectives and ensuring buy-in. Developing a clear implementation plan that includes communication, training, and a phased rollout, with mechanisms for feedback and continuous improvement, is essential. Finally, regular monitoring and review of the implemented policy are necessary to ensure ongoing compliance and adapt to evolving regulatory landscapes and business needs. Question 15. The review process indicates that a senior manager, responsible for overseeing a significant tender for new IT infrastructure, has a sibling who is a director and significant shareholder in one of the companies submitting a bid. The manager has not disclosed this relationship to their superiors or the procurement committee. What is the most appropriate course of action for the senior manager to take immediately? Option A. Inform their sibling about the tender process and advise them on how to strengthen their company's bid to ensure it is competitive. Option B. Delegate their responsibilities for this tender to a trusted subordinate without mentioning the familial connection, assuming this will remove any potential conflict. Option C. Immediately disclose the familial relationship to their direct superior and the head of procurement, and recuse themselves from all discussions and decisions related to this specific tender. Option D. Proceed with evaluating all bids objectively, confident that their professional judgment will not be influenced by their siblings' involvement. The correct answer is C. Immediately disclose the familial relationship to their direct superior and the head of procurement, and recuse themselves from all discussions and decisions related to this specific tender. Explanation: the review process indicates a potential conflict of interest arising from a senior manager's involvement in a procurement decision where their close family member is a director of a bidding company. This scenario is professionally challenging because it blurs the lines between personal relationships and business integrity, potentially compromising objective decision-making and the fairness of the procurement process. The Bidvest Group, like any reputable organization, is bound by its internal policies and relevant South African corporate governance principles to uphold ethical standards and prevent conflicts of interest. The correct approach involves immediate disclosure of the potential conflict to the appropriate authority within Bidvest, such as the compliance department or a designated ethics officer, and recusal from any part of the decision-making process concerning the bid. This aligns with best professional practice as it demonstrates transparency, upholds the principle of acting in the best interests of the company, and adheres to the spirit and letter of corporate governance codes that mandate the identification and management of conflicts of interest. It ensures that procurement decisions are made impartially, based on merit and value for the company, rather than personal connections. An incorrect approach would be to proceed with the decision-making process without disclosing the relationship, assuming personal integrity will prevail. This fails to acknowledge the inherent risk of bias, even if unintentional, and violates the fundamental ethical obligation to avoid situations that could compromise professional judgment. It also contravenes the principles of good corporate governance, which require proactive identification and mitigation of conflicts. Another incorrect approach would be to attempt to influence the decision in favor of the family member's company, even subtly. This is a direct breach of fiduciary duty and constitutes unethical conduct, potentially leading to legal repercussions and severe reputational damage for both the individual and Bidvest. A third incorrect approach might be to delegate the decision to a subordinate without informing them of the conflict, thereby shifting the burden of an ethically compromised decision without resolving the underlying issue. This is also unacceptable as it fails to address the conflict at its source and still risks an outcome influenced by the undisclosed personal connection. Professionals facing such situations should employ a decision-making framework that prioritizes transparency, integrity, and adherence to company policy and ethical guidelines. This involves recognizing potential conflicts, understanding the implications, seeking guidance from internal compliance or legal departments, and taking decisive action to recuse oneself or manage the conflict appropriately, always with the company's best interests as the paramount consideration. Question 16. The analysis reveals that during a routine client review, you uncover information suggesting a client may be involved in illicit financial activities that could have significant legal and reputational consequences for the Bidvest Group. You have a strong suspicion but lack definitive proof, and the client has always been cooperative in the past. Option A. Immediately confront the client with your suspicions and demand an explanation. Option B. Ignore the suspicious information to avoid potential client dissatisfaction and maintain the business relationship. Option C. Discreetly consult with the Bidvest Group's internal compliance or legal department to seek guidance on the appropriate next steps. Option D. Report your suspicions directly to external law enforcement agencies without informing your superiors or internal compliance. The correct answer is C. Discreetly consult with the Bidvest Group's internal compliance or legal department to seek guidance on the appropriate next steps. Explanation. This scenario presents a professional challenge due to the inherent conflict between maintaining client confidentiality and the potential for reporting illegal activities that could harm others. The pressure to act quickly while adhering to ethical and legal obligations requires careful judgment. The correct approach involves discreetly seeking advice from the appropriate internal compliance or legal department. This represents best professional practice because it prioritizes adherence to the Bidvest Group's internal policies and relevant South African legislation, such as the Financial Advisory and Intermediary Services Act, FIS Act, and the Prevention and Combating of Corrupt Activities Act, PRECA. These frameworks mandate reporting of certain illegal activities, while also emphasizing the importance of proper internal procedures and avoiding premature or unsubstantiated accusations. By consulting with experts, the individual ensures that any action taken is legally sound, ethically justifiable, and aligned with the company's risk management protocols. This also protects the individual from potential personal liability. An incorrect approach would be to directly confront the client with suspicions. This fails to consider the potential for misinterpretation, the damage to the client relationship, and the risk of tipping off the client to an investigation, which could lead to the destruction of evidence or further illicit activity. Ethically, it breaches the duty of care and professional conduct expected of an employee. Legally, it could contravene procedures for handling suspected fraud or corruption, potentially hindering an official investigation. Another incorrect approach would be to ignore the suspicious activity. This is a significant ethical and regulatory failure. It demonstrates a lack of integrity and a disregard for the company's commitment to lawful conduct and its responsibility to prevent financial crime. From a regulatory standpoint, failing to report suspected illegal activities, especially those that could have broader societal impact, can lead to severe penalties for both the individual and the company under legislation like PRECA. It also undermines the trust placed in the employee and the organization. A further incorrect approach would be to report the suspicions to external authorities without first consulting internal compliance. While the intention might be to act responsibly, this bypasses established internal reporting channels and could lead to premature or inaccurate reporting, potentially causing undue harm to the client or the company's reputation. It also fails to leverage the expertise within the organization to properly assess the situation and determine the most appropriate course of action according to South African law and company policy. The professional decision-making process for similar situations should involve a structured approach. First, identify the potential ethical and regulatory conflicts. Second, consult internal policies and relevant legislation. Third, seek guidance from designated internal experts, compliance, legal. Fourth, act only after receiving clear direction and ensuring all actions are documented. This systematic process ensures that decisions are informed, defensible, and uphold the highest standards of professional conduct. Question 17. Stakeholder feedback indicates a growing concern among employees regarding the company's environmental impact and the perceived lack of robust sustainability initiatives. While the company has made some efforts, the feedback suggests these are not widely communicated or perceived as sufficient. As a member of the management team, how should you respond to this feedback? Option A. Acknowledge the feedback internally but decide to focus on existing operational priorities, assuming that employee concerns will subside as other initiatives gain traction. Option B. Initiate a comprehensive review of current sustainability practices, develop a clear and actionable plan for improvement, and communicate this plan transparently to all stakeholders, including employees, outlining specific goals and timelines. Option C. Issue a public statement highlighting the company's existing, albeit limited, environmental efforts to counter the negative perception, without committing to significant new initiatives. Option D. Instruct the communications department to draft a response that emphasizes the complexity of environmental issues and the challenges of implementing rapid change, aiming to manage expectations without detailing specific future actions. The correct answer is B. Initiate a comprehensive review of current sustainability practices, develop a clear and actionable plan for improvement, and communicate this plan transparently to all stakeholders, including employees, outlining specific goals and timelines. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for positive public perception and the ethical obligation to disclose potentially negative information. The pressure to manage reputation can lead to decisions that compromise transparency and stakeholder trust. Careful judgment is required to balance business interests with ethical responsibilities. The correct approach represents best professional practice because it prioritizes transparency and honesty, which are fundamental ethical principles in business, and are often reinforced by regulatory frameworks that mandate disclosure of material information. By proactively addressing the issue and communicating openly, the company demonstrates accountability and builds long-term trust with stakeholders. This aligns with principles of good corporate governance and responsible business conduct, which are implicitly expected in professional assessments like the Bidvest Group Hiring Assessment Test. An incorrect approach that involves downplaying or omitting the information would be a regulatory and ethical failure. It could violate disclosure requirements if the issue is deemed material, leading to potential legal repercussions. Ethically, it erodes trust and can be seen as deceptive, damaging the company's reputation more severely in the long run if the truth is eventually revealed. Another incorrect approach, such as immediately issuing a defensive statement without a thorough investigation, risks appearing insincere and may further alienate stakeholders. It fails to acknowledge the validity of the feedback and can escalate the situation negatively. Professionals should employ a decision-making framework that begins with acknowledging and validating stakeholder feedback. This involves conducting a thorough and objective investigation into the concerns raised. Based on the findings, a decision should be made regarding the appropriate course of action, which may include corrective measures, policy changes, or transparent communication. The process should always consider the impact on all stakeholders and adhere to relevant ethical codes and regulatory guidelines. Question 18. The risk matrix shows a high probability of securing a lucrative new contract with a key supplier. However, you have recently discovered that the primary decision maker at the supplier company is your sibling. You are not directly involved in the negotiation process, but have significant influence over the final recommendation to Bidvest's procurement committee. What is the most ethical and professionally responsible course of action? Option A. Inform your sibling about the potential conflict and ask them to withdraw their bid to avoid any appearance of impropriety. Option B. Proceed with your recommendation as usual, believing your professional judgment is objective and that your sibling's company is genuinely the best choice. Option C. Immediately disclose your familial relationship to your supervisor and the procurement committee, and recuse yourself from any further involvement in the recommendation process for this supplier. Option D. Discreetly leverage your influence to ensure your sibling's company is favored, rationalizing that it's a win-win situation for both parties. The correct answer is C. Immediately disclose your familial relationship to your supervisor and the procurement committee, and recuse yourself from any further involvement in the recommendation process for this supplier. Explanation. This scenario presents a professional challenge due to the conflict between a potential business opportunity and the ethical obligation to maintain integrity and avoid conflicts of interest. The pressure to secure a significant contract, coupled with the personal relationship with the decision maker, creates a situation where objectivity could be compromised. Careful judgment is required to navigate this delicate balance. The correct approach represents best professional practice because it prioritizes transparency and adherence to Bidvest's code of conduct and relevant ethical guidelines. By disclosing the personal relationship and recusing oneself from the decision-making process, the individual upholds the principles of fairness, impartiality, and good corporate governance. This action mitigates the risk of perceived or actual bias, safeguarding the company's reputation and ensuring that decisions are made solely on merit. This aligns with the fundamental ethical duty to act in the best interest of the company and its stakeholders, free from undue influence. An incorrect approach that involves proceeding without disclosure and attempting to influence the decision maker, even subtly, constitutes a significant ethical failure. This action breaches the duty of loyalty and integrity, potentially leading to a conflict of interest. It undermines the fairness of the procurement process and could result in a contract being awarded based on personal connections rather than the best value for Bidvest. Such behavior could also violate internal policies and potentially lead to disciplinary action. Another incorrect approach, which is to withdraw from the opportunity entirely without any communication, is also professionally unsound. While it avoids direct conflict, it fails to leverage a potentially valuable business opportunity for Bidvest and does not proactively address the ethical dilemma in a constructive manner. It also misses an opportunity to demonstrate ethical leadership by transparently managing the situation. The professional decision-making process for similar situations should involve a clear understanding of the company's ethical code and conflict of interest policies. When faced with a potential conflict, the first step is to identify it. Subsequently, one should assess the severity of the conflict and its potential impact. The next crucial step is to seek guidance from a supervisor or the compliance department. Finally, the decision should be to disclose the conflict and, if necessary, recuse oneself from any decision-making or influencing activities related to the matter, ensuring that all actions are documented and transparent. Question 19. During the evaluation of candidate applications for a critical management position at Bidvest, you discover that one of the most promising candidates is a close personal friend. Your friend has confided in you about their anxieties regarding the upcoming assessment, which includes a case study analysis and a behavioral interview. You are aware of the specific areas the case study will focus on and the types of behavioral questions that are likely to be asked. What is the most ethically sound and professionally responsible course of action? Option A. Share specific details about the case study scenarios and the exact behavioral questions you anticipate, framing it as a way to help your friend perform their best. Option B. Advise your friend to withdraw their application, citing potential conflicts of interest that might arise during the assessment process. Option C. Discreetly provide your friend with general guidance on the assessment's focus areas and common question types, emphasizing that this is not specific information, but rather helpful preparation advice. Option D. Inform your friend that you cannot discuss the assessment details due to confidentiality and the need for a fair evaluation process for all candidates, and then proceed with the assessment as per standard procedure. The correct answer is C. Discreetly provide your friend with general guidance on the assessment's focus areas and common question types, emphasizing that this is not specific information, but rather helpful preparation advice. Explanation. This scenario presents a classic ethical dilemma where personal relationships conflict with professional obligations and the integrity of the hiring process. The challenge lies in balancing fairness to all candidates with the desire to assist a friend, while upholding Bidvest's commitment to merit-based recruitment and avoiding any perception of impropriety. The regulatory framework for hiring assessments, including those used by Bidvest, emphasizes objectivity, fairness, and confidentiality. The correct approach involves maintaining strict impartiality and adhering to the established assessment procedures. This upholds the principle of equal opportunity for all candidates, ensuring that selection is based solely on qualifications and suitability for the role, as determined by the assessment criteria. It also protects the integrity of the assessment process, preventing any undue influence or bias that could compromise its validity and Bidvest's reputation. This aligns with ethical codes that mandate professional conduct, integrity, and avoidance of conflicts of interest. An incorrect approach would be to provide the friend with advance information about the assessment content, or to subtly steer them towards certain answers. This constitutes a breach of confidentiality and fairness, undermining the assessment's purpose and potentially leading to the selection of an unqualified candidate. Such actions could also expose Bidvest to reputational damage and potential legal challenges if other candidates perceive discrimination. Another incorrect approach would be to ignore the friend's request entirely without explanation, which, while avoiding direct impropriety, could be perceived as unsupportive and may not effectively address the underlying ethical conflict. A professional decision-making process in such situations requires recognizing the conflict of interest, prioritizing adherence to established policies and ethical guidelines, communicating transparently, where appropriate and without compromising confidentiality, and seeking guidance from HR or a supervisor if unsure about the correct course of action. Question 20. System analysis indicates that a key supplier, with whom Bidvest Group has a significant ongoing contract, offers a senior manager a substantial personal gift and an all-expenses-paid holiday if the manager ensures that the supplier's contract is renewed and expanded. The manager is aware that other suppliers can offer comparable services, and the supplier's offer is not based on merit or superior performance. Option A. Delay reporting the offer to the compliance department while discreetly seeking advice from an external legal consultant on how to best manage the situation without implicating oneself. Option B. Inform the supplier that the offer is inappropriate but suggest that a token of appreciation for a job well done might be considered after the contract is finalized. Option C. Immediately report the offer to the Bidvest Group's compliance department and refuse any further engagement with the supplier regarding the contract renewal until the matter is resolved. Option D. Accept the gift and holiday, and then subtly steer the contract renewal process to favor the supplier, ensuring the offer is not explicitly mentioned in any documentation. The correct answer is C. Immediately report the offer to the Bidvest Group's compliance department and refuse any further engagement with the supplier regarding the contract renewal until the matter is resolved. Explanation. This scenario presents a professional challenge due to the inherent conflict between a desire to secure a valuable contract and the obligation to maintain ethical standards and regulatory compliance. The pressure to meet targets, coupled with the potential for significant personal gain, can cloud judgment. Navigating this requires a robust ethical framework and a clear understanding of professional responsibilities. The correct approach represents best professional practice because it prioritizes integrity, transparency, and adherence to the Bidvest Group's code of conduct and relevant South African legislation governing business ethics and anti-bribery. By immediately reporting the offer to the appropriate internal channels, the individual demonstrates a commitment to upholding the company's values and preventing potential legal and reputational damage. This aligns with the principles of good corporate governance and the duty of care owed to the organization. An incorrect approach that involves accepting the offer and concealing it from management is a direct violation of ethical principles and likely contravenes South African law, such as the Prevention and Combating of Corrupt Activities Act (PRECA). This action constitutes a serious breach of trust and could lead to severe disciplinary action, including dismissal and potential criminal prosecution. It undermines the integrity of the procurement process and creates an unfair competitive advantage. Another incorrect approach, which is to subtly influence the decision-making process to favor the vendor without explicitly accepting the bribe, is equally problematic. While it may appear less direct, it still involves a conflict of interest and a deviation from objective decision-making. This can be seen as a form of undue influence and can still lead to a compromised procurement process, potentially violating internal policies and ethical guidelines. It erodes the principle of fairness and impartiality. A further incorrect approach, such as delaying reporting the offer while seeking external advice without informing the company, is also professionally unsound. While seeking advice is not inherently wrong, doing so without transparency to the employer in a situation involving a potential ethical breach can be interpreted as an attempt to circumvent internal procedures or to find a loophole. This delays the necessary internal investigation and remediation, potentially exposing the company to greater risk. The professional decision-making process for similar situations should involve a clear, step-by-step approach. 1. Recognize the ethical conflict and potential regulatory implications. 2. Immediately cease any engagement related to the improper offer. 3. Consult the company's code of conduct and relevant internal policies. 4. Report the incident promptly and factually to the designated authority within the organization, e.g., compliance department, legal counsel, or line manager if appropriate. 5. Cooperate fully with any internal investigation. 6. Avoid discussing the matter with the party making the improper offer or with colleagues who are not directly involved in the reporting process. 7. Seek guidance from internal compliance or legal departments if unsure about the correct procedure.